Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices. Took one on the chin today, big declines. Actually, this only the sixth biggest single day decline in 2018, but it was a big one, down about 18 bucks when the dust settled. And the market just seems to be continuing the trend lower, something that we haven't seen in a long time, to see the trend of gold prices decline this steadily for this long. And right now we got, 1200 is a level we haven't been through in a long time. The market just doesn't feel like there's much support here. And I think in order to see any kind of reasonable bullish outlook or bullish tint of any kind is if we get a trade back north of 1225 and we stay up there for a few sessions. Right now that's been the trouble, is we get these modest upticks, but they don't hold, and gold prices continue to go down. And why essentially the bottom line for why all this gold selling is the reflection of the dollar. The dollar spiked again, highest it's been in over a year, the dollar index. We continue to see it more of a defensive trade, a reactionary trade to what's happening in Europe and Turkey specifically. Emerging markets are seeing blow-ups, and that's kind of been a flight to quality bid to the dollar. So right now the dollar is continuing to drive trade in gold. It's going to continue to do so. It used to be what we talk about, maybe Fed policy, expectations, treasury yields behind me. Were those who were driving gold prices? No, right now it's all about the dollar. And that's going to continue to be the driver, at least for the foreseeable future. And if you look at where the speculators sit right now, they are drastically near the line in the sand, the 0.0 position. And if it flips over to the negative side, it will be the first time since 2002 the speculators were net short gold, something you don't typically see. So right now we are daring to be, in levels we have not seen in over 16 years. It's doubtful that we'll see a big position shift that way. However, I think that right now there's still a lot of downside potential, and you're going to see speculators wait for that bounce. They want to see that bounce, and maybe possibly a sustained trade. It may take some institutional or dealer buying to come in to be the ones to stop the downtick here. But as long as the dollar continues to push higher, I think gold will find lower prices until there's some event that triggers a reversal. And I think that the speculators are waiting for that, but they'll wait a day. They'll do it the day after. I don't think they want to front run this move. They've been fooled too many times with these modest upticks, getting in the day after, getting in the day of, and then only finding out that we trade down another 10 bucks the next day. So right now gold price is looking lower with very little support in sight. We need an uptick to 1225 in order to see a sustained trade, and that would get us back to at least looking into buying. But right now the dollar is in total control. This is Todd Colvin coming to you from the floor of the CME Group.